You had an opportunity to demonstrate your presentation skills, your ability to explain and all that. Yeah. So the issue of manipulation, was it there? Those who have logged on, I'm sure all of you attempted the test. I remember I've seen the note from Albert, from Sydney. Christine, did you find time to go through this question? The one we're looking at? Christine, did you find time to look at the question that we are looking at now?
No, I tried to download it because on the phone I couldn't see properly some of the things. So okay. I wanted it on the laptop, but I couldn't.
Okay. Because that's the question that we are about to go through. What of Angela? You did go through, eh? You attempted, eh?
Yes, sir. I even submitted.
Yes, you even submitted. No, the response was overwhelming, actually. Yeah. Okay. So let us address the issues then. Was there any manipulation? Was there any manipulation? And these questions just help us to get a further understanding or insight into performance reporting. Yeah. So where was the manipulation here? Where was the manipulation? Let's discuss. Revenue from new and redesigned bicycle models grew by 200% in 20x5. Profit before tax has improved by 86. Operating profit margin has fallen by a small 1.8%. The admin expenses include the income from a 2-year government grant of 5 million. Revenue includes revenue from Zom new electrical bicycles, 25 million 20x5. Exception costs are the cost of developing new electrical bicycles. So what do you think? Any items that you think you feel could be classified as manipulating accounts? Are there any items? Any manipulation? So the issue that we're looking for is presentation. And this is where yesterday we were talking about small paragraphs and making our points. Okay. But also bolding or underlining your subheadings so that they clearly stand out. Okay. Let's go to come to the next item. The next item in the question, the next item in our question was the consultant's reports on external business environment. So what are the specific requirements that we are to attend to? Yes, the requirements are very specific. The CEO has recognized that the company operates an increasingly volatile external business environment. Therefore, he has employed a consultant to perform a base analysis, and he has given you the relevant extracts. He stated that he does not want you to re-perform the consultant's analysis of the external environment. He says he wants you to focus on the implications of pest factors identified. And then on providing justified recommendation of a suitable performance indicator to measure the impact of those factors. Another fair question, where pest came. So pest is one of the variables need to understand the environment, especially when we're doing a risk assessment. Your risks or risks are normally associated with these four elements. The comments that were made by the consultant were not complicated, they were quite straightforward. But the point is, you're supposed to comment on the impact on the performance management of the company. The government of Beeland has recently provided tax allowances to citizens who use a bicycle to commute to work. It has also supported cycling by building many new dedicated cycle paths. That's very clear that it's an opportunity. These are huge opportunities. So a business is expected to thrive. And when you look at the other aspects of the environment, it was just the same. It was just opportunities and opportunities and opportunities. Okay, so what could be some possible indicators? What could be some of the possible indicators? Technology impacts on FIAG in two ways. First, the development of new models such as Zone, where the lightweight aspect will further enhance the model's attractiveness spared to the elderly. And not continue to monitor competitive advantage, the average weight of FIAG's models should be compared to the average of its competitors. So there was the issue of a KPI. There was the issue of the KPI. Have we identified the KPI which they're talking about here? Second, new materials could improve further the contribution per unit as the material costs are cut. The use of contribution or gross profit to measure this impact is plausible because they may be indirect since they change, since this change may also influence the selling price. Therefore, a measure of direct material cost per unit would capture the change. So the issue was the KPIs, the relevant KPIs. How did we fare on the KPIs? Normally the issue is on the KPIs. Find appropriate KPIs. unjustified. Okay. The learning point in this question was the planning and operations variances. I think that's where the learning was. The learning here was how the use of planning and operation variances could assist. So there's clearly an issue here with the production department. The senior management set standard costs and budget for each department once a year. Already we can see an issue there. Just once a year. Emphasizing that the concepts such as what we covered, the rolling budgeting approach, has no room in this company. The SPM's problems arose in relation to the main product of the SPM department, the Speedy. The original standard cost for this bicycle was $255. During the year, actual production cost on the bicycle were $225 with 85,000 manufactured. Could somebody please do the division there? Could somebody do the division in 2.5 million divided by 5,000? Actual cost per unit?
$265.
Okay. The main reason for the higher actual cost was a result of 16%, was a rise of 16% in material costs. As these materials are imported, and the government has imposed extra tariff on imported goods. If this had been known at the time that budget were set, the standard cost would have been set at $268 per unit. The SPM would receive the second part of her bonus, 10%, if costs have a favorable variance. So now, what is the requirement here? Let's look at the issue now. Let's look at the issue here. A senior production manager, SPM, has recently been angry at her failure to receive part of her bonus for the year. When she felt she had performed outstandingly, she is rewarded her bonus in two parts. One part is shares in the company in order to reflect the overall company performance. Another part is cash based on performance of her department compared to budget. It was this part where her expectations were not made by the reward. During year, the same significant price changes in materials used in production. The SPM has suggested that the budget variance should be broken down into those that she can control and those that are out of her control. As such, assessments of is otherwise unfair. The CEO has supplied you with data relating to this in appendix and wants advice from you on the implications of this suggestion for management accounting and for the SPM in this particular case. Okay, so here you have got room to demonstrate your planning and operation variance. Just a basic computation, really. Just a basic computation. Just a basic computation. Just a basic computation. Are we able to demonstrate the planning and operation variance here? Are we able to demonstrate the planning and operation variance?
Yes, we are.
We are.
Oh, yes. So planning variance is the difference between the actual budget, between the original budget and the revised budget, which has insight, and then the operational variance is the revised budget versus the actual budget.
Okay.
That's the difference.
Okay. Now we have got the information here. Are you able to revise the original budget? Are you able to update the original budget? The materials went up by 16%. Are you able to update, to demonstrate? Because they gave you enough information here for demonstration. Take the original budget, add the 16%. What do you come up with? You take that, you add the 16%. What do you come up with? What do you come up with? Let's go. Please, can you revise? 255 plus 16. What do you have?
$295.
You have 295.
Yes.
What was the actual?
$268.
268. Okay. So what are we saying then? Was the manager supposed to get their bonus, the second part of the bonus, the cash bonus?
Yes,
Okay, reason?
because the imposed tariffs were outside the control of the manager.
So the variance should have been based on what?
On operational,
Yeah,
yes,
yes, on the revised budget. Yeah, so it's some students on there was very heavy planning and operations. No, this is really just the concept of controllability. The concept of controllability, which we have spoken about quite a number of times, isn't it? Yeah. Quite a number of times we have exchanged notes on the concept. Okay. As we have worked on, they're working on a total. As we have worked on a what? A unit. As we have worked per unit. Okay, let's compare notes. So 268, the revised is 268 was our actual. 268 was our actual. Okay. Let's do a comparison. The main reason for the higher actual cost was a rise of 16% in material cost, as these materials are imported and the government, okay. 268, 255. So when you increase the 16%, what did we get? 255 by 16%. What did you, what's 295?
sir.
It was 295. Okay, so let's see our analysis. 268 by 85,000. Actual cost was 22.5. The revised was 268. Total planning variance 255 by 85. Total operational variance was 0.28. Okay, so that's the approach that was taken on a total basis, 268 by 85. Okay. Revised the standard cost to 22.78. The original was okay. So how much was our planning? Our planning variance was how much? Our planning variance to 268, 255. The actual cost was 22.5. Okay, let's just do a small reconciliation. $22.5 $22.55 22.5, so 22.5, so the actual cost was 268. Okay, the main reason for the higher actual cost was a rise of 16% in material costs. So material costs went by 68%, so 68, so 268 by 85. The revised standard cost should have been 268. Interesting. Interesting. So 22.5 divided by 85, we get 260. Oh, the standard cost. Okay, that's okay. That's okay. No, that's okay. So the 268 is, so the cost should have been 268. Actually, everything had been given. There was no need of even a 16%.
Yeah.
There was no need of 16% because everything was given. Just 268 compared with the 255. Compared with, so 268, 255. Yeah, so the cost would have been 268. But 85,000 divided by 22.5, what do you get? So
264.
260?
4.
Yeah, 264. Yeah. So the actual was 264. The actual was 264. So then the original budget was 255. The revised budget was 268. The actual was 264. Yeah, so that's our planning variance and that's our operations variance. So whether we had used a 16%, the conclusion will still be the same. The manager was supposed to get their bonus. The manager was supposed to get their bonus too. So that's it. That's what was expected from us. But of course, to define a planning variance and operational variance as well. To define the planning variance and the operational variance. Okay, so that was a question which I think was well attended this morning. So all I need to do now is to grade your work so that everybody can get their marks, and it should act as a boost as you go to the exam, isn't it? I'm sure everybody's morale will be boosted now. Okay. The next exercise, I want us to calculate, to do some an EVA computation. So I'll give you an EVA computation, and I want you to do a quick computation of the EVA in your Excel and try to see how much work you can manage to do. So just get ready with your Excel, and I share with you the question that we are going to, that we want you to attempt. So the question is here. Okay, so I'm pasting that's this short question. Eva. Okay, let's attempt that question. Let us attempt that question on Eva. You drop your weighted average cost of capital, your capital employed, and your NOPAT. It's sitting on the WhatsApp forum. It's sitting on the WhatsApp forum. Hello, how is the question going on?
Going through?
You are through?
No, still going through. Still
Oh,
going
okay.
through.
Okay.